Good morning, traders. Welcome to Thursday of this beautiful week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump on in, we always need to check the news so we know what's going on and when it's going on, so we're not taken by surprise by anything. So looking at the news calendar, we do have some news announcements today. Most of them, actually all of the big news ones, are at 8:30. 8:30 has the building permits for November. The forecast is 1.550 million. We also have the initial jobless claims forecasted at 800,000, and the Philly Fed Manufacturing Index forecasted at 20. That's really the only big news that the market has today. The majority of the quote-unquote big news was yesterday on Wednesday. So as far as today goes, it's really about all we've got to worry about. 8:30, we've got some minor stuff at 10:30 with nat gas inventories, 11 o'clock with the KC Fed composite, but nothing really much after that. So let's jump into some charts for today. Today is 12/17 of 2020. All right, first up on the list is going to be the NASDAQ, and overall, it just keeps on chugging higher. The overall movement had an ascending wedge working its way up, and realistically, the way things are moving, it's just not stopping. We're breaking above the ascending wedge, and that doesn't seem to be doing much, right? Normally, when you're breaking above a bullish pattern, it's very difficult to sustain that kind of movement because it takes a lot of money, right? Bullish pattern breaking higher isn't easy, and that's kind of what we have going on right now. And it's not just that it's going on the NASDAQ; it's at all-time highs. It's continuing to squeeze higher. There's no relief for the sellers yet, especially even after that gap over the weekend. There's still probably shorts who are stuck short after that weekend gap, expecting it to fill, and it hasn't yet. And usually, if it doesn't by like Monday or Tuesday, it's going to take by the end of the week, or potentially even a couple weeks to months before we actually see it come back. So all of those things stepping up together, creating a situation that the NASDAQ might be looking for some serious continuation up. Of course, the big concern, not wanting to buy too far up, right? That's one of the big issues. So the first zone of interest, 12,633.50. We can get a dip back down to where the earlier buyers came in the first place. And if they really want to shove lower, there may be some minor support in the middle at around 578, 579, but the next big zone of support is going to be down at 12,444. And a really healthy dip down to 444 would be fantastic for buyers to try to push right back in again. Next on the list, we've got the S&P, and so far the S&P is pushing back up towards the top of the channel. It finally made it. Now, with the bullish continuation to the upside, we're seeing a bit of a flip in terms of, looking in comparison to the NASDAQ, where the NASDAQ was kind of the weak one. And now the S&P is sort of the weak one, and the NASDAQ's breaking out. The S&P is getting stuck at the channel. The NASDAQ had already kind of broken above that and showing some good conviction. So we've got a little bit of a breakdown here. Obviously, there's a lot of profit taking going on. We're at the top of the channel. We're at the R3 on Fibs. There's a lot of reasons to suspect that we're probably seeing some profit taking up here. Along with that, if we zoom in really close and we just look at the volume for today, one of the biggest volume bumps was earlier, right? There. And if you look where that volume took place, the majority of that volume took place on those highs, suggesting that there is a ton of profit taking going on up here. And now we're seeing the market consolidate after that. That definitely gives us a pretty big clue in terms of what's going on at the moment. It is still kind of a bull angled consolidation. So looking at the overall move, and you can kind of see it there. There's a chance that we get another bullish continuation breakout, and that would be breaking above structure and sort of following along in the NASDAQ's footsteps. But as it stands right now, it seems like the market's getting a bit overextended. It might be a bit healthier for it to pull back, but then again, that might also be asking a lot for it to pull back. If it does, big zone of interest would be down at the 3680s to see if they can get a dip back down to that major structure. And in the short term, there's some definitive support right around where the bulls kicked this whole move off at around 3705 as well. Something to keep an eye on if it pulls back, but maybe a little bit more shallow. Over on gold, we have a bit of a blow-off on the highs, and that would definitely suggest we've got some potential deeper pullbacks coming, but it is just at the beginning stages of it. Looking at the overall move, what it's fairly obvious is that this channel seems to be more of a median. And every time the market kind of goes above it, it tends to want to go back to the other side, even if it is sideways, and try to break down through the lows. We're showing the same situation here, where if we look back, we had a really strong rally into the highs, and then it just didn't do anything until it finally made its way to the bottom and then continued breaking out higher. We might see the very similar situation where we've got this really nice blow off. We've got a big spike above the highs, which would suggest that at some point we're going to see a break below the lows of about that same size. But what we need to see first is obviously the market getting through midline support and all of these other things. And given what happened last time, it did it in more of a sideways to slightly up fashion, right? I mean, it went up for the majority of the pre-market, quick dip at the open, retested it, and then went flying back up. We might have a similar situation. So going into the start of this, we're kind of seeing, hey, maybe there's a chance that gold goes into a bit of a range and sideways choppy sloppy. But if it does want to pull back, we do have some very nice areas of interest down at 1849, 1850s, where the bulls really kind of kicked everything off. Seeing all of this profit taking going into the top, it would suggest that that pullback's coming. I just want to see it go a little bit deeper. And crude oil had finally broken above the $48 mark. We had some continuation to the upside early this morning, late last night, and it made its way all the way up to the upper 48s, 48.60s, before starting to pull back. Obviously, buyers are going to be very interested in this, but the problem is we have a bullish structure, right? The structure being the wedge in this case, pointing higher, and the market attempted to break up above that structure, which, just like we've been talking about most of the morning so far, that's very unsustainable. It's hard to maintain that kind of movement without getting a pullback, and we're starting to see that pullback. We've got the bit of the blow off on the highs of the wedge, so if a pullback is going to happen, it's usually going to be in about that same size, which parks major support sitting right around 47.30s or so to ping price back up. And then we'll have to kind of fight over the wedge again, right? We get the breakdown of the wedge, then we come back to the lows. Do sellers want to take it? If they fail, then we go higher. Do the sellers want to take it there? If not, then we'll go higher. You got a little bit of a fight when you're dealing with these wedges, so play it a little bit closer to the chest. But overall, I mean, we've got some nice support down there. Over on the euro, we have a very similar situation in that we have a bullish structure, which is breaking out higher, pretty typical across the board. And realistically, what we're seeing a lot of is sideways. It's having a very difficult time breaking above that big spike high. I mean, you can see that gigantic chunk of volume that came in too. But looking at this overall move to the upside, well, realistically, it seems like buyers are having a lot of trouble above that area, which, would mean that they're probably looking for a bit of a pullback. Now, a nearer term zone of interest for a pullback, you'll notice candles left behind a bunch of gaps. There's no overlap inside there. There's no wicks, nothing like that. Well, generally markets don't like that. So seeing it backfill for a quick bounce off of, the 22415 area, maybe a little bit above that, for a continuation up. But if that doesn't hold, there's not much left to hold the euro up until we start dipping way back to the start of, well, where everything kicked off, and that's at 1.21915 all the way down to 21530. So this is kind of the problem with these bullish moves breaking out higher. It's really tough because if they can't hold it, there's a wide open hole in the floor that's just waiting to suck them down. And then all of a sudden we find ourselves all the way down at the bottom buying dips again. So just be careful. This is a zone that could get very interesting. And then the good old Bitcoin market finally breaking above 20,000. It finally made it over 20,000. And not only did it make it over 20,000, that wasn't good enough, right? We know how Bitcoin operates. It broke above 20,000 and rallied all the way up to almost 24. Made it up to 23,700s depending on your exchange. And the overall movement to the upside isn't showing any signs of exhaustion. When you have this overextensive move that's showing too much, you'll start seeing signs in things like the MACD or the RSI or the CCI or something starting to show some form of divergences. We're not getting that. They're all equal peaks or higher. So everything is still showing some really good momentum up. Obviously, the big zone of interest was back at 20,000. That was the big break point. It's pretty obvious there. But if the market is going to want to pull back, eventually there will be a pullback, because there always is. And with Bitcoin, those pullbacks tend to be a lot more aggressive than people anticipate. So as far as an aggressive pullback right now, a flush back to 20,000 seems almost too good to be true. So realistically, I mean, that might happen, and that would be a great spot for buyers to pick it back up, especially if this keeps going higher, because then it would be more of a washout. But right now, as it stands, it's such an obvious level, and there's so much volume that came in at 20,000 that buyers might understand that and say, you know what, 20,500 just to be safe, to make sure that they get in at the base of that support. Either way you slice it, this thing is massively bullish. The problem is we've overshot the top of a bullish structure, like we've been talking about all day. That takes a lot of money to make that stick. The difference is Bitcoin has that going for it, right? It's in the limelight. Everybody's keeping an eye on Bitcoin because it just broke all-time highs that people have been waiting for years now. So all eyes are on it. It's not like it's just doing this in the dark. Everybody on the planet knows what's going on with this. So this is a little bit different. This potentially does have the sustainability in the fact that there's no roof on this thing, and a limited supply of Bitcoin. You can kind of see the longer term implications of this, where, you know, just a couple of years ago we were talking about Bitcoin at 3,000. Now we're talking about it at 20,000. In a couple of years from now, are we going to be talking about it at 100,000? You know, that's kind of the mindset that a lot of people are going into this now. It's like, man, you know, maybe I should just throw $50 in here every once in a while and just see what happens. That's dollar cost averaging. And this is really, really showing that potential. Now, keep in mind, it's all the way up at 20,000 now, which means that it can fall all the way from 20,000 again. Ask anybody who got stuck at 19 how that felt. So don't get caught up in these highs too aggressively. This isn't where, you know, you're going to see the news announcements of people selling their house and putting it all on Bitcoin or whatever, just like they were doing with Litecoin back in the day. This isn't the time for that. Right? This is when the euphoria, the greed starts stepping in. This is where you get those squeezes, and it could go catatonically nuts, right? I mean, this thing could go absolutely crazy all the way up to 100,000 next week. Never say never. But realistically, is that going to happen? Probably not. More likely, we're going to see a lot of profit taking now that we've put in a definitive high, and then we'll go sideways for a little while. So it kind of remains to be seen on what it wants to do here, but a little bit more of a talking point on Bitcoin because it is such a massive zone of interest here. Alrighty, well, that's going to do it for today. Like we always say, stay safe out there, keep those stops in play, and let those winners run. I hope you have a great day of trading, and we'll see you all in the next one. Thanks.